Yes. Let's talk to Warren Ingram this evening, who is a financial advisor. He's a director at Galileo Capital. Have you come across this phenomenon, Warren, where people are in full panic mode and are selling not only the kitchen sink, but the whole house around it and getting rid of the money and happy to rent in tens and twenties of thousands of rand accommodation for them and their families in perpetuity?
Absolutely. I mean, I think the first time I really saw that panic was when they appointed an Afrikaans guy as finance minister by the name of Van Rooyen. That really sent people off the edge.
When was this? Was this in the 1940s probably or somewhere like that? Des. Okay, sorry.
Des.
Sorry, yes, that guy. I'm thinking you actually done some work and gone and done some research, but you're just remembering stuff. Okay.
Just remembering stuff. No, so I think that was the first time I saw that real overt panic. And I remember, chatting to a surgeon based in Zimbabwe, and he was telling me, that he'd built his beautiful house and neighbors around him were all selling, their 20 million rand palaces and sending the money out and renting. And then all of a sudden, Pravin came in and things sort of stabilized and they were trying to find their 20 million rand palaces again, and they were all sold out and they couldn't buy them again at the same price they'd sold them.
And again, those stories are legion. I remember talking to Ian Cruikshanks it was a big anniversary. It was the anniversary of Lily's Leaf. And we decided to say, what was the economy like 50 years ago when Lily's Leaf was raided? And Ian Cruikshanks, who was at the time an economist at Nedbank, he's now with the Free Market Foundation, I think, was just going, 1970s, houses were cheap. People were going and handing you keys to the bank and saying, cheers, I'm out of here. And property prices collapsed and people picked up bargains and people built generations of familial wealth on that basis. It doesn't mean we're in the same place now, but our history does suggest that to be true. Personal finance, by the way, brought to you by RMB. Join RMB Private Bank and experience solutionist thinking. Warren Ingram. So, is there anything wrong if you are concerned, if you are of a nervous disposition, to sell the family house and to say, I've got a mortgage of 5 million or 10 million, and I can afford to spend, therefore, if I sell the family home, 50,000 or 100,000 rand a month on rental? I would have been spending it on interest payments to the bank anyway.
I think it's so. The principled answer to your question, no, I don't think there is. But I think there's also the reality that a lot of people that are having this debate with internally as families have bought their houses maybe in the last 4 or 5 years, and if they were to sell them now, most likely they're selling them at below the price they paid. And that's a starting point. And very often, they might not realize an overall loss. In other words, they might still have paid down quite a bit on their mortgage over the last 4 or 5 years. But many people would be selling their house at quite a bit below what they paid. And in anything, if anything, they might actually be getting back less than what the outstanding bond is. And to me, that's a real cost. That's a permanent loss of capital. That's not something that you can easily recover by sending your money out of South Africa. When the rand's at 14.60 or whatever it is today, send it out to international markets that frankly are not cheap at all, and then think that actually over a 5-year period you're going to be better off. I think you've got to deal in a life of probabilities, and the probability is that's a bad decision.
Yeah, I mean, there was a time where you were not a fan of property ownership. You were quite happy to rent property, and then Mrs. Ingram decided she wanted a garden, one that she would invest money in, because I remember these things. And so you did eventually go and buy a house. But for a lot of people, home ownership is at the very core of building a sense of security and wealth and a place of home. And lots of South Africans, frankly, right now are wondering whether or not this is home, are wondering whether or not there is a sustainable future in South Africa. And I put it to you, Mr. Ingram, as you are on the witness box, that, things like the unveiling of Edward Kieswetter in the last 24 hours as the new SARS commissioner is yet another tick box that, governance of the country is on an appropriate track.
I think that's the wonderful thing about the jobs, I guess, if that's the right word, that you and I have sitting here, is that we need to zoom out and we need to kind of take a bigger picture and a bigger view as to what's going on both in South Africa and internationally, and then try to give people a broader perspective. And I think one of the things to talk through is, we've had 9 disastrous years as a country, and all the stuff that we're reading about now is telling us about what's happened, what's gone on, and how much damage has been caused. But there is so little that broadcasts and that kind of hits us in the forehead with what's going right. And I think back, I'm reading through notes of meetings that I had a year or two ago, telling people that, one of the things that I'm really worried about and that we need to see being addressed is the mining charter. And it needs to be a rational charter, and it needs to be something that, that the industry and labor and government can sort of get a broad consensus on. And it's amazing that up until, 24 hours ago, we weren't talking about the mining charter anymore. Why? Well, because it was resolved in a sensible, rational way. And yes, there's a bit of court action now, but the industry is at pains to tell you that it's a kind of administrative process.
It's a procedural thing, not a Zwane fight back. Yeah.
And that was the first time. That was the kind of the first flag that could have been green or red for me, and looking at our country and saying, okay, so have we stopped digging the hole deeper, and are we either starting to fill the hole or at least just cementing a foundation from which we can grow? And since then, I've seen many more green flags than I've seen red flags. And yes, we're in election season now, and yes, things are going to get hairy in terms of what politicians are saying, but actually where the rubber meets the road, good things are happening and good appointments are being made. Am I saying that suddenly, we're due for a 5 or 7% economic growth in the next 12 months? Definitely not. I'm not that crazy, and I don't believe that.
You're an optimist. You don't have to be mad to be an optimist, but it helps. But yes,
yeah,
okay.
And I mean, what I'd like to try and tell people now is, be realistic in your optimism or your pessimism. And I think at the moment the overall sense from everybody is pretty much, well, not everybody, but a lot of people. Not everybody. That would be a gross generalization. From a lot of people is pessimism, and I think to the point of almost irrational pessimism.
I wonder how different the tone of our conversation tonight would be if we'd gone into a third week of load shedding and we were sitting here smelling diesel fumes as we did for 2 weeks before this.
Yeah, with no aircon.
Yeah.
And I think I think to me, I can't remember who keeps saying it, but don't waste a good crisis. And I think that that timing to me is just so interesting, that load shedding when it happened.
You become a conspiracy theorist. Those diesel fumes not at all. Got into your brain. Yeah.
One day we'll write a good novel about it. But I think that the timing was interesting, and I think at the same time it probably gives impetus to the whole move to restructure Eskom. And it's amazing how much noise there was against and opposing this restructure, and how all of a sudden that noise is dying down. And so yes, if we were in our third week of load shedding, that would have been a problem, and we would have been grumpy. But I don't think it would have changed my tone. I think you might have been more grumpy than me in that instance, because I've got solar. But
yes.
But the point here is that it's yet another opportunity to start fixing some of the damage that's going to take a long time to fix, but we're here. And I think all of these commissions are telling us about our history. So it's a bit like, we're starting to accelerate this car that we're driving, and at the moment a lot of people are looking in the rearview mirror and telling us about where we've been, and they're not looking forward and telling us, or at least just looking at where we could go. And there's so many avenues from here where we could go. Not all good. I'm not saying that. There are some bad ones, and there could be some scary scenarios from here. But to discount all of the potentially at least neutral or positive scenarios, I think is irrational. And I think that's what a lot of people, a lot of commentators, a lot of talking heads, that's what they're doing.
I have to concur. I mean,
What?
I concur.
Can we record that, Chris?
See, concur is a nice word, because it's not, I didn't say I agree. I didn't say you're right. I just said I concur, which is different to all of that. Okay, let's get you want rubber hitting the road. Let's get on to the Moodys risk, because in the next 24 hours, Moodys will be letting the ink dry on a statement, which either it will release or it won't release. And it's possible that it won't release the statement. It's likely that it will release the statement. In that statement could be a couple of different things. One statement saying we're not doing anything. Another statement saying we are cutting the the outlook from neutral to negative, and you better start behaving yourselves, children. And then the fourth version could very well be the full-blown downgrade. No sensible human being I've spoken to anyway is forecasting the Armageddon scenario there, but it's not impossible. How much of a risk is the threat of a looming downgrade? Because that's what it is. It's the threat of a looming downgrade.
Yeah. And it's so I think there are a couple of things. One, that threat is much more imminent than it was 3 weeks ago, prior to load shedding. So there's a potential that this load shedding costs us, because I think the Dennis Dykes comment was real. That this isn't over yet, and so we might still have some more load shedding through the year, and then the potential for any kind of economic growth is probably zero, and maybe we go backwards by the end of the year. But the flip side is that if you Moodys, that there are lots of issues that you're looking at. There are lots of kind of almost balanced scorecards that you're weighing up in a really objective and rational way, and they will look at their scorecards and say, well, what's changed for the negative, and Eskom certainly is a negative, and economic growth is definitely not going anywhere. But are there any positives? Have we seen a stabilization of the institutions, etc., etc.? And so again, they're not going to be overly emotional about the commissions that tell us about all the things that have gone wrong. They're going to look at this and say, well, this is being aerated now. This is being ventilated, and if it's being ventilated, if there's action being taken to correct those, then that will be a positive. So what are the risks? The risks are, I agree with you that it's quite unlikely that we go from current status to a straight downgrade, and so the risks are that we get put on a negative outlook. It's really unlikely that we go from negative outlook to no change. In other words, if we go to negative outlook, the most likely outcome after that is that we get a downgrade. It's depressing and sad and all those things, but that will be how I will read that if that's what happens.
Okay, let's work on that as a scenario.
Okay. What we need to look at is what's happened to investment markets. And when I say investment markets, I'm talking about the stock market, the rand, and the bond market. And then this whole credit, they call them CDSs, credit default swaps. So the risks of a default, the risks inside the bond market. What's happened to those markets leading up to tonight? Because I guess that's pretty much the last time that things will really happen. And all of them have gone somewhat haywire. So it tells you that already in the price of our credit market, our rand and the like, that they are pricing in bad news. They are pricing in that things aren't going to go well for us. And so what's interesting is when I talk to investors now, they're saying to me, what should I do? What should I do if we are downgraded? Well, the answer is, the rand's already at 14.65. That's not great. That's not a great. I mean, I'm thinking the rand should be at somewhere around 13.50 to 13.90 as a fair value. So at 14.65, it's not good news. And the stock market's not exactly booming, and the bond market's not, and the credit default swaps are definitely not. So it tells me that the market's already priced in quite a bit of bad news. And if that happens, and we then get a negative outlook, most likely the rand might weaken a bit more, and the stock market will take a bit of a pummeling for a day or two or three, I don't know, and the bond market and the rest. But then people are going to start looking at these things, and I'm saying people being in major institutional investors and the like, and they're going to say, okay, the threat of things has changed. It's gone from a threat to now much more of a reality, and instead of now trying to project on a probability of things happening, now we can project on a reality of things that have happened, and therefore we can price the rand, the bond market, the credit market, and the stock market on more certainty. And one thing that's interesting about markets, they don't like negative news, but the one thing they hate much more than negative news is they hate uncertainty even more. And that's the thing, one of the things I think we looked at probably going way back to 2016 was what happens to currency markets and bond markets and stock markets when a downgrade happens? What happens in the 12 months thereafter? And quite interestingly, things go in the direction you don't necessarily think. In other words, they could well bounce because now the uncertainty is out, and now they can price in what the corrective action is and what happens. And that's what I'm thinking now is, when people are trying to do something in anticipation of this potential downgrade, they have to get so many decisions right. They firstly have to get right whether it's going to happen. Then they have to get right what they need to do. How are they going to react to that to make money out of it? But more importantly, they have to react to how other people are going to react to potential, and then be on the right side of their prediction of other people's predictions. That's a heck of a lot of predictions to get right to make profit or to avoid loss in a situation like this. I think too many things to predict.
So I mean, the thing is, there's nothing worse though in the face of a potential, however remote that potential might be, a potential upheaval. And to sit back and do nothing is the hardest thing in the world. But is that what you're suggesting? Sit back and do nothing?
It's frankly, if we've hit the iceberg, it's too late. It's too late to kind of now go and build yourself your life raft.
There are still lifeboats, and should you be making a run for the lifeboat in that particular? You've used the Titanic scenario.
No, I think that what will happen by then is that the lifeboats are gone. In reality, I think we're looking at the price of all of these things, and I think a lot of the stuff is in the price already. So my view would be, and it kind of bringing it all the way back to the start of our conversation around properties, for example, is now would not be the time post a downgrade to go and sell your house, and now would not be the time to go and sell all your rands and buy dollars, because I think there'll be an element of rationality that will come back into markets. Markets do overcorrect in every direction. And so this is the time to wait it out and sit on your hands and stop looking at your investment statements for a little while.
Are you suggesting then that the people who have already taken that action and have taken their money out the country may have had a point?
No, I'm not suggesting that, because I think it'll be about when and how and what you did. So, for example, if someone sent their money out at 8 Rand to the dollar, well, that was an extremely good decision. But if they sent it out at 14.50 to the dollar,
or 16 to the dollar, or 17 at final round time,
then no, that wasn't a great call. And it's again, it would be a kind of a thinking error to say, well, the rand only goes in one direction from here, because if it corrects back to 13.50 or 13, let's say, then how are they thinking, and what are they thinking then? And if someone says to me that's impossible, I'll give you one really likely scenario that how that can swing in really quickly, and that would be Donald Trump shake hands with the Chinese premier, and they agree a fair trade deal that takes all of this uncertainty out of the global markets, and all of a sudden there is appetite from international investors for emerging markets as a general asset class. That means that some 26-year-old trader sitting in the corner of the big trading floor in London somewhere suddenly says, oh, I have to buy emerging markets today. He's not worrying about what our downgrade was. He's just buying. And that's how quickly this situation changes.
Any bets on tomorrow's call?
No. You've never heard me make a bet on something like that. I'm not going to start now.
Oh, come on, why not?
No.
I wanted something to badger you about next week.
I know. The real truth from my point of view is I just have no cooking clue, and I'd flip a coin. I have, that's as much chance.
I haven't got my magic coin here.
Thank goodness.
I'm ill prepared. Warren Ingram from Galileo Capital with small business with small finance this evening, because our finances are smaller than they were. Pavlo's up in a moment with small business, but Warren Ingram, thank you very much indeed. Warren Ingram from Galileo Capital.